Is Ascendas REIT undervalued based on yesterday, 12th of November 2025, closing price of $2.83? Is this the moment Singapore income investors can finally lock in solid 5% plus COPI money dividends before the Fed starts cutting interest rates in 2026? Today, I'm breaking down Ascendas REIT's third quarter 2025 business update, released on SGX on 31st October 2025, and we'll walk through its portfolio strength, financials, rental reversions, valuations, and of course, whether it's worth topping up right now. Stay till the end, because I'll also share what the Fed rate cut outlook could mean for Ascendas in 2026 and what Singapore income investors should consider before making any move. Before we dive in, if you find this helpful, like this video so more Singaporeans can see it, and subscribe to Wealth for You for more Singapore dividend and REIT insights. Disclaimer: this video is for education and general information only. It is not investment advice, does not consider your personal financial situation, and should not be relied upon to make financial decisions. Please do your own due diligence. Chapter 1. What exactly is a REIT? Before we dive into the numbers, let's get the basics clear. A REIT, Real Estate Investment Trust, is like you owning small slices of huge buildings, warehouses, business parks, factories, logistics hubs, even data centers. The REIT collects rent and distributes most of that cash to you as dividends. Think of it as being the landlord, without fixing toilet pipes or chasing tenants for rent. Perfect for Singaporeans who want steady income without buying a $1 million condo. Chapter 2. What does Ascendas REIT actually do? Now let's zoom into CapitaLand Ascendas REIT, Singapore's largest industrial and business space REIT. According to its third quarter 2025 business update, this REIT is essentially a giant global landlord, managing about $17.7 billion worth of properties spread across some of the world's most developed markets. After the latest UK divestment, it now owns roughly 229 properties, including 97 in Singapore, 34 in Australia, 49 in the United States, and another 49 across the UK and Europe. What this means is that Ascendas isn't just a Singapore story. It's a globally diversified portfolio covering factories, logistics hubs, tech parks, business parks, and even assets linked to data centers. It earns rent from a wide mix of tenants across multiple industries and geographies, which helps smooth out volatility when any single market slows down. Operationally, the REIT is holding up well. Portfolio occupancy stands at 91.3%, and the WALE, or weighted average lease expiry, is 3.6 years, giving visibility on future cash flows. On top of that, rental reversion came in at a healthy plus 7.6% in the third quarter alone, with management expecting low double-digit reversion for the full year. In everyday terms, tenants are renewing at higher rents, and they're committing to stay for a decent period. That's exactly what income investors like us want to see: stability and predictability. Ascendas is also actively reshaping its portfolio. In the last quarter, it completed $381.5 million of divestments, all at a premium to valuation, and most recently completed the sale of Ascendas Road in the UK on 17th of November 2025. In simple language, they're clearing out older or less strategic assets and recycling that capital into higher quality, better yielding properties. It's like upgrading from an old rental flat to one with better tenants and stronger long-term returns. Chapter 3. Financial snapshot and is it undervalued or overpriced? At the closing price of $2.83 on 12th of November 2025, Ascendas REIT sits at a valuation that many income investors would consider reasonable. The REIT carries a market cap of around $13 billion and trades at roughly 18 times earnings, with a price-to-book ratio of about 1.25 times. Its return on equity sits at roughly 6.8%, showing moderate profitability for a large industrial REIT. On the debt front, Ascendas maintains aggregate leverage of 39.8%, which is comfortably below the MAS regulatory limit of 50%, leaving about 10.2 percentage points of headroom. That's a healthy buffer, especially in a world where interest rates and refinancing costs matter more than ever. So the big question is, at $2.83, is Ascendas REIT undervalued, fairly valued, or overpriced? Looking at these numbers, Ascendas appears fair to slightly undervalued. You're paying only about a 25% premium to its book value, which is modest for a REIT of this size and stability. A PE of 18 times is also in the acceptable range for a blue-chip industrial REIT with predictable rental income. On top of that, its leverage is well under the MAS ceiling, giving the REIT plenty of financial breathing room. Add to that the strong, positive rental reversion they are reporting, which signals that tenants are renewing at higher rents, and the valuation becomes even more reasonable. Now, this isn't one of those once-in-a-decade clearance sale opportunities, but it is a valuation that makes sense for investors who want steady, dependable income without paying an excessive premium. In simple Singaporean terms, this isn't a $2 chai fun plate where you immediately shout, "Confirm buy." But it's also nowhere near a $9 mala siang guo shocker that makes your heart pain at the cashier. It's a fair plate with good ingredients, and for long-term dividend investors, that's often exactly what you want. Chapter 4. Dividend Yield and Is It Sustainable? At the current price of $2.83, Ascendas REIT offers a trailing dividend yield of about 5.35% based on dividend paid out of 15.176 cents for the past year, and the forward yield is estimated to be around 5.4%. For many Singapore income investors, the big question is whether this payout is something they can rely on, not just for one quarter, but for years to come. So, is the dividend sustainable? If I had to summarize it in one sentence, yes, it is reasonably sustainable, but not guaranteed. Think of it as a stable source of Kopi money, as long as the business fundamentals continue holding up. There are several reasons the dividend looks sustainable today. Occupancy across the portfolio remains healthy at 91.3%. And rental reversion is strong at plus 7.6%, meaning tenants are renewing at higher rents. The tenant mix is robust as well, spread across tech, logistics, engineering, and other resilient industries. Leverage is also safe at 39.8%, comfortably below the MAS limit, giving the REIT more room to manage refinancing. And because Ascendas is globally diversified, the income stream doesn't rely on any single market or country. But, and this is important, the dividend isn't bulletproof. The ROE sits at a moderate 6.8%. The payout ratio is relatively high. And overseas assets bring along FX and macroeconomic risks that are outside management's control. Higher interest rates, if they persist or spike unexpectedly, could also squeeze the income available for distribution. So the most accurate way to describe Ascendas's dividends is this. It's like your daily Kopi O. It usually arrives on time and you can generally count on it. But depending on how the uncle brews it that day, the sweetness might vary a little. Chapter 5. Fed Rate Cuts and What It Means for Ascendas. Looking ahead to 2026, the backdrop could turn more favorable for Ascendas REIT. A recent Reuters poll suggests that most economists expect the Fed to begin cutting rates as early as December 2025, driven by signs of a weakening U.S. job market. And when global rates start easing, Singapore's borrowing costs often follow. For Ascendas, lower interest rates translate directly into lower financing costs, which means more of its rental income can flow through as distributable income to unit holders. On top of that, falling rates make REIT yields more attractive relative to bonds, creating potential valuation upside as investors return to income assets. At the same time, the demand backdrop for industrial and logistics properties across Singapore, the US, Australia, and Europe remains healthy, giving Ascendas a fair chance of stable to positive rental growth in 2026. Of course, risks don't disappear. Inflation could surprise on the upside. Global growth may soften. Overseas currencies may swing. And competition in the REIT space remains intense. But even with these uncertainties, 2026 still looks more positive than 2025 for well-diversified giants like Ascendas. Chapter 6. What Singapore income investors should consider. So what does all this mean for you as a Singapore income investor? Ascendas checks many of the right boxes. A 5% plus dividend yield, strong rental reversions, a wide and resilient tenant base, and a comfortable leverage level that's well below the MAS ceiling. With potential tailwinds from upcoming Fed rate cuts and a reasonable valuation at $2.83, it stands out as one of the steadier anchors for a dividend-focused portfolio. But staying informed is key. Keep an eye on interest rate trends, occupancy levels, overseas risks, refinancing costs in 2026, and the stability of its distribution per unit. These are the levers that will determine whether the COPI money keeps flowing smoothly. Ascendas may not offer the highest yield or the fastest growth story, but it is a steady, dependable, COPI-friendly income generator. For Singaporeans aiming to build a cash flow-rich lifestyle, this is the kind of REIT that holds your portfolio together while letting you focus on living your life. Final thoughts. So, is Ascendas REIT undervalued at $2.83? Based on everything we've seen today, the portfolio strength, positive rental reversions, manageable leverage, and a 5% plus yield, Ascendas looks slightly undervalued, and at the very least, fairly priced for long-term income investors who want stability over hype. If this breakdown helped you understand Ascendas REIT better, smash that like button so more Singaporeans can learn how to be cash flow rich, not paper rich, and don't forget to subscribe to Wealth for You for more REIT, dividend, and passive income insights every week. Before you go, drop a comment below. How many cups of COPI does your dividend portfolio buy each month? I'd love to hear your COPI money count. Thanks for watching, and I'll see you in the next video.